Welcome back, traders, to this video. Uh, I welcome you back to the Forex Geek channel. We're going to be talking about Elliott Wave Extensions in this particular video. If you are familiar with Elliott Wave Theory, you probably already know that the market moves in predictable cycles, right? But what happens when a wave goes beyond its usual range? Well, that is where Elliott Wave Extensions come into play. These extensions are important to understand because they signal some of the most powerful moves in the market. By the end of this video, you will not only understand how to spot Elliott Wave extensions, but also how to use them to refine your trading strategy and make better, more informed decisions. If you find this video useful, don't forget to hit that like button and subscribe to the channel for more trading tips and strategies. Now, what are Elliott Wave extensions? Let us start with the basics, okay? What exactly are Elliott Wave extensions? To put it simply, they are instances where a wave in the Elliott Wave pattern exceeds its normal price range. Let me just add the Elliott Wave indicator to the chart, okay? In the standard Elliott Wave theory, the market moves in 5 waves, right? 1, 2, 3, 4, 5. Each wave has a specific role in the market cycle, but sometimes one of these waves extends beyond its usual limits, and that's where we get the Elliott wave extension. These extensions most commonly occur during wave 3 or wave 5. For example, wave 3 is often the most powerful and longest wave in the cycle. We can see that right here. When it extends, it tells us that the market is going beyond expectations and could continue moving in that direction for an extended period. So this extension creates significant trading opportunities. But why are Elliott wave extensions important? Understanding Elliott wave extensions is crucial because they help you predict the next big moves in the market. If you are using basic Elliott wave analysis, you are likely identifying the usual waves and corrections. But when you spot an extension, you know that the market might continue in its current direction longer than you might expect. So why is this important? Well, if you are not aware of Elliott wave extensions, you could get caught in a trade too early or exit too soon. But with a keen eye for extensions, you will be able to ride the trend for a longer period, making your trades more profitable and timely. For example, when wave 3 extends, it usually indicates a huge move. Recognizing this can help you stay in the trade longer and potentially add more positions during the extended wave. In some cases, wave 5 might also experience an extension, okay, providing even more upside potential. By knowing how to upside potentialize for a bullish trend or downside potential for a bearish trend, right? So by knowing how to identify these extensions, you'll stay ahead of the curve and avoid being surprised by price movement. Now, let us talk about how to spot Elliott wave extensions, okay? The most important thing to know is that extensions don't happen every time. You have to know that, okay? But when they do, they are usually very noticeable. One of the best ways to spot these extensions is by looking for the signs of an unusually strong wave 3. All right. Now, wave 3 is the primary wave where extensions happen, and it is often the longest and most powerful. So, if wave 3 is significantly longer than wave 1 and 2, then chances are high that you are in the middle of an extension, like what we had happen around here. There's a possibility that we are in the middle of an extension. Okay, the market is likely to keep pushing, giving you an opportunity to take advantage of that momentum. So another way to spot Elliott wave extensions is by using Fibonacci extensions. These are key tools that help predict where the extended waves might end. Fibonacci levels such as so Fibonacci levels such as 161.8%, 261.8%, and 423.6% are frequently used to identify potential target levels for extended waves. Okay? When you see these levels aligning with your analysis, you'll have a clearer idea of where wave 3 or wave 5 could top out. Now, Fibonacci extensions are crucial because they allow you to project potential price targets for the extended wave. For example, if you are in wave 1, wave 2 retraces, and then you see a massive surge during wave 3, right? So you can use with Fibonacci extensions to identify where that wave 3 might top out. The same goes for wave 5. Fibonacci extension levels can help you predict where the market might go, reducing your risk of exiting too early. It's also important to pay attention to the volume, okay? Extensions are usually accompanied by strong volume as the market participants pile into the trade, pushing the price higher. So keep an eye on volume spikes as you look for extensions in wave 3 or wave 5. Now let us talk about trading with Elliott Wave extensions. First, you need to be patient, okay? Extensions don't happen every day. So you need to keep your eye on charts and wait for the right setup. When you identify a potential extension, it's important to trade with the trend, okay? So don't fight the market. If the extension is happening, let the trend continue. Be sure to adjust your stop loss orders accordingly to lock in profits as the price moves in your favor. Also, don't forget to use Fibonacci extension levels to set your price targets. These targets act as guideposts, helping you decide when to exit the trade or take partial profits. So with a good understanding of where the extension might end, you can plan your exits better and manage your risk more effectively. In conclusion, Elliott Wave extensions are powerful market movements that offer incredible opportunities for traders. By understanding when and where these extensions occur, you can increase your chances of staying in profitable trades longer, avoid early exits, and make better trading decisions. Remember, wave 3 is typically where the extension happens, but wave 5 can also see some extended moves. Okay, so use tools like Fibonacci extensions and volume analysis to spot these moves before they happen. And as always, trade with the trend and manage your risk appropriately. All right, if you found this video helpful, make sure to like and subscribe to the channel, hit the notification bell so you never miss a video. Thank you for watching, and I'll see you in the next one.